Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook with Joe Kooima of Kooima Varilek. We are seeing some pressure in the grains here on a Monday morning, while livestock futures are mixed in the hogs and higher in cattle. In fact, let's start off there because I think we had gap higher openings in live and feeder cattle futures this morning into new contract highs and some all-time highs again. And let's talk about what's pushing it. Cattle inventory and cattle on feed reports came out on Friday. And how bullish did you think those were?
If you look at the on feed report, the placement number, I mean, you're having Mexico borders shut here for the last 7 months, so that's where that power is coming from to drop it from 98 down to 92, coming back that way. I mean, that's explosively bullish, and that's what we are seeing here this morning right away. When you gap higher into new contract highs, that only fuels the bulls. It probably fuels the funds that they can maintain their position that they have. So that's where the most aggressive part of the futures is reacting to there. If we do break down, it's a struggle because both these reports coming out at the same time. The inventory report can be a little cumbersome here right now because they want to compare it to 2 years ago, which is a life cycle for cattle. So it's hard for me to really look at those numbers and stand on them firmly, if that makes sense. But if we look back at the January inventory report and you compare some of those numbers, you're going to see that our total number of cattle and calves actually increased from January, as did the cows and heifers that have calved. So we're starting to see a little bit of a rebuilding of herd, and it's difficult to really find a true study for that. So it's still kind of a guess on our part as well, but it's tough for me to look at this inventory report and compare it to 2 years ago and use that as judgment moving forward. I'd rather kind of look at the January numbers there. So there should be maybe a few flashers kind of going off here. 2015 is still in recent memory. And that's when we had a bigger crash back in 2015 when we had the tightest numbers there. So I don't always like to use a phrase that it's a futures market, but this would kind of fit that mold here a little bit, that when we do come into the tightest numbers in the cattle, a lot of times the futures markets will have that figured out prior to when we get there. So I'm not saying that's bearish today, but there's just a little evidence here looking at this report, comparing it to January, that, hey, let's not get too excited here, especially feeders having a $35 rally here in the month of July. We haven't had a major correction yet either. Intraday $3 or $4 correction there, but we haven't had one of those $8 to $10 to $12 breaks. I don't think August feeders have to do it. Tied to the index there, it's got a premium to it. So cash feeders breaking records again last week. So I'm not trying to send mixed signals here necessarily. It's just kind of an outlook that we are looking at here for the most part.
Yeah, and the hard part, Joe, is that everybody is focusing on that inventory report and the headline of, hey, this is a record low, the lowest ever in this series, right?
Yep, and we've been doing that the last 5, 6, 7 years. I mean, first it was the lowest number since the 70s, and then the 60s, and now it's all time, and the futures have taken note of that. We're at price levels obviously we've never been before because of that, but we are starting to see some moisture fall. I mean, heavy rains about every 2-3 days. We seem to be getting a swath somewhere, so that should be in the back of a person's head as well.
Yeah, no doubt. Are you hearing from your clients that they're looking at rebuilding, or what kind of questions are they, or decisions are they having to make as far as if they're gonna be expanding at all, or if there's any heifer retention?
Right, that's a great question. We do ask that from time to time to our customers, and we can get kind of a mixed answer. There are some that are doing a little bit where the moisture is falling. I've talked to one customer that actually is going to keep keeping cows back and then still sending the heifers into town. So even just locally, just talking to our customers, it's still tough to figured out, completely 100% which way things are going there. So I don't know if I have the right answer for that. It's a great question, but you can kind of find what you want when you ask around a little bit.
Well, we do know it has been very profitable, so hopefully folks have cashed in at some point and are healing as well. So the other thing, Joe, that kind of drove the market here this morning is some steady to a little bit better cash trade on Friday, right?
Yep, we held out to Friday to see what the on-feed number was. So cash, you can call it, I'm going to just say it was steady, better. In some cases, I think the South was a little bit better at that 232 marker there. But we're not getting a whole lot of cash cattle trade right now. Packers are up to something. They're doing some kill cuts to kind of rein in things here just a little bit. But yeah, the cash market last week was fine. And it is tough to have these bids in front of you, even if cattle aren't quite ready and pass a 240 or pass a 242. I mean, we're making a lot of money here at these price levels, and the market has a tendency we can be up $3 in a week, and there's been weeks where we're down $5-6 too. So having that bid at these price levels is difficult to pass up for sure.
You bet. Okay, so the hog market mixed this morning. We've been having a difficult time trying to take out some of these overhead resistance areas. Tell me what's driving this market right now, because we know slaughter levels are lower than they were a year ago, but why aren't we able to get through those resistance areas?
I think you almost need maybe some fresh news in the marketplace. The driver behind hogs here right now is similar to the cattle story, tight supply compared to a year ago. And I would kind of bet or guess that it's actually less than what we're actually showing as far as kill percentage compared to a year ago. The disease issues from the beginning of the year. I mean, you'll have your cycle where you have some PRRS or PED show up in the spring and then again in the fall. But this one has just been chronic. Even the last 2 weeks, we hear of farrowings that blow up with some disease, whether it's PRRS or PED. We've got several customers calling in that they're getting, they should be getting in 1,200 into their flow, and they're getting 800, and they still aren't happy with the quality that's coming in there. So that is your complete driver in this marketplace right now. But that disease issue has just been a repetitious kind of a news cycle that the market always wants something new to trade. So the next step here is to find some kind of a great export deal or find a demand trigger that's going on. But it's definitely the tighter supplies here.
Okay, so you mentioned export deal. China, we've kicked the can down the road another 90 days, it looks like, here in terms of the tariff news. They're in Stockholm right now meeting. But is the market really optimistic, you think, about something being done or resolved with China or not?
It's a great question. I would be in the camp that the market is tired of having these kickback deals 60 days or 90 days or whatever. And I think the bigger picture with China too, that the last 2 years, they've become very reliable on their own herd. Remember a couple of years ago, they were building apartment complexes for hogs, for farrowings. So they have a huge amount of production that just showed up. So even the last 2 years, they just haven't been a key component in our exports at all. So I can't get excited about it as far as hogs go. I mean, there's other things you can get excited about if it does happen. But I think the number one thing here we have to, not rule necessarily, but we have to keep Mexico happy. I mean, they've taken first place last 2 years over top of China, and we have to keep them happy. I think that's the bigger one.
Right. We did get monthly cold storage report out on Friday as well, down 6.3% month over month in terms of inventory and freezers, down over 11% year over year. Is that bullish? Is the market going to trade it?
I think so. It just goes with the story of the tighter availability of fat hogs right now. You can't keep them. Can't get the Packers to get enough of them right now. The demand issue, I shouldn't say it's an issue, but the demand for pork to me is a little bit, it's there. It's not as good as it can be. This Prop 12 continues to be a little bit of a thorn in the side for pork demand. California is 15% or was probably still is, or 15% of the U.S. domestic demand went to California. And their pork prices that they have in their grocery stores are very comparable to beef. So that is a huge point that we need to get across and open that up and get those prices to drop a little bit. If we can get them to drop a little bit, I think our demand would be great. But since they have higher prices there in California compared to the rest of the 49, it's tough to get that ball rolling for great pork demand.
Yeah, that's a good point you make. Okay, grains all lower this morning. Corn and soybeans making more new lows for the move. We got an EU deal over the weekend, and we did get some more export flash sale reports out this morning for corn, but we can't get the market to move. Is it just because weather has been too good?
Very, non-threatening kind of weather. I mean, a little bit of a heat dome that showed up from last week, which part of the crops actually need a little bit of that, but got some moisture again last night through the western part of the belt. Again, some more showing up tonight and even through tomorrow, and then we get a cool down to mid 70s in some areas. So very non-threatening weather. Funds are short. They're adding to their positions, new lows today. So it's you got to convince them that they're wrong with their position, and right now they're not. Demand. Yeah, we saw that show up this morning. We're going to attract, some countries buying our production here just a little bit, but it doesn't seem like they're in a hurry. We have a large amount of corn acres, so even if things aren't exactly 100%, we still have a big production number, and they know that, so they just kind of fill in to buying some corn when they need to, but there's no rush like we had a couple of years ago where we had inflation going straight up and the grains were following with it, and we cycled demand. We had every other day we were having new sales, and right now you just don't have that. You have every 6-7 days you see that at 8 o'clock.
All right, thanks so much, Joe Kooima with Kooima Varilek. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win, you get to be right. Don't just win. Talk with your retailer or visit Brevant.com/win to get started.